What's going on, team? It's Caddy with Money Investing. I hope that you all are having an amazing day. So in this video, we're going to talk about the S&P 500 and the Nasdaq, and I'll give you guys a market update and we'll do a technical analysis on both of those market indices, ticker symbol SPX and IXIC. We'll kind of go over how the week essentially played out, where the markets closed for the week, and where can we potentially see them going next week, and kind of map out the next key support and resistance levels that we need to watch. As always, if you guys enjoyed this video, please make sure to drop a like. It really helps out with the channel. Also, make sure that you subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. So right now we're looking at the S&P 500. Tech taking a little bit of a breather today. So Apple was down close to 2.5%, AMD down over 2%, Microsoft close to 2%, Amazon also down over 1.78%, Twitter almost 1.5%. So if you kind of scroll up, you'll notice Intel, IBM, Disney, MasterCard, ExxonMobil, Google, they were all in the red. And the only kind of the sector that was kind of doing well today was financials. So Wells Fargo, Bank of America, JP Morgan, Berkshire Hathaway, and then a little bit of retail and industrial as well. So you can see Lockheed Martin, 3M, Nike, CVS, Verizon, GE, they were all kind of up on the day. But that being said, based on price action and talking a little bit about the S&P 500, yesterday, you guys remember that I had mentioned kind of like this red rectangle, which is going to be the bear camp or the resistance, which we now need to see if it's going to potentially get converted into a bull camp, or if the bulls are going to be able to validate that support. So this right here was acting as a previous resistance, and this is coming from the last week of January, right? So if you were to kind of pull back, you'll notice if you were to extend this entire red rectangle, this right here is the resistance from back on January 22nd. So kind of like going back as far as the last week of January when we hit that level and then had a pullback of over 3%, dropping all the way as low as 32.20. So this was the resistance we were following, but then yesterday the market essentially break out of that resistance because of this huge momentum that came into the market. So this right here is the bullish candle, and today I want to highlight something that's really important based on price action. If you were to look at the 1 hour chart, you'll notice this right here is where we opened. So the market's opened at 9:30 a.m. right around here. So we push up, and this 3350 level, we had recognized this as a really strong level of resistance. Yesterday we hit that level and then had a pullback. So today we not only do we gap down, we push up the first couple hours, get rejected, pull back, push up again towards the end at around 12:30 p.m., get rejected at this 3350 level, sell off all the way down to this support at 3330. So this right here is going to be where both of these candles, so low for this candle, 33.28, low for this candle, 33.29. So a lot of support at that level. And then towards the end, you can see how the bulls just came in once again, pushing the markets higher right at this resistance. In my previous market updates, I had essentially mentioned this: a strong support, a strong resistance, and then eventually breakout. A strong support, a strong resistance, and then eventually a breakout. So right now we're seeing a very similar pattern. A strong support, a strong resistance. If there's a lot of buyer momentum and a lot of bullishness in the markets, we can potentially see another breakout over 3350. But that's kind of like the price action standpoint. When the S&P hits low of day and high of day within a 30-minute span, it just goes to show that there is volatility, and these levels are being validated very nicely, right? So 3330 acting as a really strong support here. 3350 acting as really strong resistance here. So the only question begs is whether we're going to find a catalyst, whether we're going to drive markets higher and for the S&P to actually break out of these levels. And it has done an incredible job in doing that, right? Based on previous patterns, we were finding resistance at this 3300 level before eventually breaking out of this. Then we started finding resistance at 3330, and then we eventually break out of this. The whole idea is that these previous resistance levels have now started to become as really strong support, right? So this was acting as previous resistance, now validated today twice in a 2-hour span as a really strong support. So that's kind of like the game plan next week, is for us to kind of see whether we're going to break out of 3350 or we're going to see some type of rejection, pull back all the way down to 3330 to see if we can validate this support, or if we're going to pull down even further, validate 3317, which has also acted as a really strong support. You guys can see right here more recently, And if we do validate this, then we can see an upward momentum again. Or if we do pull back even further, then the next support is sitting at 32.80, which we have again validated very, very nicely. The bulls have done an incredible job pushing the support higher and higher and higher each and every week. So if I were to bring out the RSI and the MACD very, very quickly and go over to the daily chart to kind of understand where exactly are we. So you can see that we are right at 68.90, right? So we are getting a little bit too overbought. And the last time we were over 70 was back on June 5th. So you can see that we were right at 74. Anything over 70 is considered a little bit too overbought on the daily chart. So you can see how we pushed up all the way. And at that time, we were trading all the way as high as 32.33. And then you can see this huge pullback down. So the S&P dropped over 6 or 7% rather, all the way trading as low as 3,000. So we pushed up all the way, and then the RSI dropped also over 36%. Since then, it pushed up, started to consolidate a little bit, pulled back again down to 44 before pushing up higher. And this right here was when on July 22nd, it was getting just a little bit too overbought. So it was trading at 64, 65 levels, and we saw it pull back down to 3,200, and that was a drop of over 2%. So right now you can see that the last few days we have just essentially pushed up so high. So the S&P just, has pushed up over 4% in the last just 4 to 5, 6 days. And the RSI is just getting a little bit too overbought at this point, right? So it's trading almost at 69. So I would not be surprised if we do see a minor pullback. If you do see a pullback down to this 3285 to 3300 level, just to get a little breather, because the S&P has just been on a tear, and so has been the Nasdaq, right? So before we jump into that, I want to quickly go over the 5-minute chart as well to kind of break down the price action from today and kind of exactly what happened, and then where that support got validated, very, very nicely. So this right here is kind of like where we validated the support again today at right around 2:20, 2:30 p.m. And this right here is low for the day. So the S&P hit the low at 33.28. And then this right here is high for the day. Going from low of day to high of day, pushing up 70 basis points, definitely goes to show how much momentum there is in the market. The bears are just sitting at every single resistance that we have found and identified, and the bulls are just doing their best to hold that support. So now we're going to jump over to IXIC, ticker symbol, which is going to be Nasdaq, and you'll kind of notice a different pattern than the S&P 500 because tech was selling off, but in S&P, the industrial and retail was actually doing well for the S&P to move higher. But in tech, we kind of had mentioned, and I had brought this up, this whole idea of us trading in between this channel, which is what we have recognized. So I was essentially predicting a 300-point push from 11,000. Yesterday we went as high as 11,109. So this is what this was. And then today we are kind of having a consolidated pattern or pulling backwards. So you can see how the Nasdaq is down over 87 basis points, whereas the S&P 500 is actually, I think it closed flat, or was it up? It was up close to 6 basis points. So in terms of the Nasdaq, where's going to be the next support? Well, the next support is going to be strongly, in my opinion, sitting at 10,830, which is going to be a drop of, I think, close to over 170 points or 1.5%, which is where we have found previous resistance. So that was kind of like a double top for the Nasdaq, which in my opinion could very well hold its support. And Nasdaq in general makes sense. It's taking a little bit of a breather because big tech in general has just consistently made higher highs. So I would not be surprised if, again, we do see a pullback down to this level. If we do break below the 10,800 level, then I'm going to be watching this higher low. So kind of like this ascending low where the Nasdaq has found support in the past, which sits at right around 10,600 to 10,650. So that being said, it was kind of like, again, a sector rotation type day when we saw a little bit of tech selling off, whereas industrial, energy, and a little bit of financials doing actually really well today and pushing the markets higher for the S&P 500 and the Dow Jones, which was actually up as well, over 17 basis points, closing in at 27,433 as of the time of this video. And again, S&P closing above the 3350 resistance. So we need to watch next week whether the S&P breaks out of that level or if we see some type of a rejection, pulling back down to 3330 and 3300 levels. As always, if you guys enjoyed this video, make sure to drop a like. It really helps out with the channel. Also, make sure that you subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. As always, happy investing, and I will see you guys in the next video.